December 2024. While the world watched crypto markets and tech stocks, Russia did something no central bank has done in 50 years. They announced they're buying silver. Not gold, silver, and they're spending $535 million doing it. But here's what makes this terrifying. This isn't about investment, this is about war. Financial war. In China, they've been quietly playing the same game for over a decade. What you're about to discover is how two superpowers are using a metal that most people ignore to dismantle American financial dominance. How they're building a system that could make your dollars worthless. And why silver, the most overlooked commodity on Earth, has become the weapon of choice in the greatest financial conflict of the 21st century. This isn't conspiracy theory, this is documented strategy. And by the end of this video, you'll understand why the global financial system as we know it is about to change forever. To understand what's happening with silver, you first need to understand what America did to Russia, and Iran, and Afghanistan, because that's what triggered everything you're about to learn. The United States doesn't just have the world's strongest military, it has something far more powerful: control over the global financial system. And for the past 2 decades, America has weaponized that control. Here's how it works. The US dollar is involved in nearly 90% of all international currency exchanges. It's used in half of all cross-border trade. And it represents about 58% of central bank reserves worldwide. This dominance gives the United States unprecedented power. When the US wants to punish a country, it doesn't need to invade. It uses financial sanctions. It cuts them off from SWIFT, the messaging system that facilitates international banking. It freezes their dollar-denominated assets. It threatens any bank or company that does business with them. Look at what happened to Russia after the Ukraine invasion in 2022. The West didn't just sanction Russian companies, they froze over $300 billion of Russia's central bank reserves. Let that sink in. Russia had saved $300 billion, mostly in dollars, euros, and Western bonds, and with a few keystrokes, it became inaccessible. Iran faced similar treatment. When the US reimposed sanctions in 2018, Iranian banks were cut from SWIFT. Their ability to sell oil in dollars was restricted. Their assets were frozen. High inflation followed, currency devaluation, economic pain designed to force compliance. Afghanistan? After the Taliban takeover in 2021, the US seized $7 billion of Afghan central bank reserves. Just took it. This is what economists call dollar weaponization. The Federal Reserve can choose who gets emergency dollar liquidity during crises. The US Treasury can designate any entity as sanctioned. American financial institutions dominate global banking infrastructure. And here's the critical point that changed everything. When Russia's reserves were frozen in 2022, every other country watching realized something terrifying. Their reserves, trillions of dollars sitting in Western banks and bonds, weren't actually theirs. They were hostages. China's finance ministry was reportedly put on high alert. They began running risk scenarios. What if the US froze Chinese reserves? What if access to SWIFT was cut? What if the dollar system itself became a weapon pointed at Beijing? From 2022 onward, the de-dollarization movement went from theoretical discussion to strategic imperative. Countries weren't just talking about reducing dollar dependency anymore. They were actively building alternatives. Russia and China began settling trade almost entirely in rubles and yuan, currently about 90% of their bilateral trade. India explored rupee-ruble mechanisms. The BRICS nations accelerated plans for alternative payment systems. But reducing dollar usage is only half the solution. The other half? Finding something that can't be frozen, seized, or weaponized by Washington. Something physical. Something valuable. Something that's been money for thousands of years but exists outside the Western banking system. Gold was the obvious first choice. But silver? Silver is the stealth weapon. And that's where our story really begins. In September 2024, Russia made a historic announcement that sent shockwaves through commodity markets, though most mainstream media barely covered it. For the first time in half a century, a major central bank explicitly declared it would add silver to its state reserves. Not as a byproduct of other operations, not quietly, publicly, strategically. $535 million allocated over 2025-2027, specifically for silver, platinum, and palladium. Why is this unprecedented? Because since the 1970s, when the world abandoned gold-backed currencies, central banks have overwhelmingly held only 3 things: foreign currency, gold, and government bonds. Silver disappeared from official reserve strategies decades ago. Russia just brought it back. And they're not being subtle about why. At the 2024 BRICS summit, Russia announced plans for BRICS countries to establish a platform for directly trading precious metals, gold, silver, diamonds, without using US dollars. No SWIFT, no Western banks, no possibility of sanctions. Russia's silver strategy serves multiple purposes, each more strategic than the last. First, sanction-proof wealth. You can freeze bank accounts, you can block SWIFT access, you can seize government bonds, but physical metal sitting in Moscow vaults, unreachable. Russia learned this lesson the hard way when $300 billion vanished from their reserves. Second, reserve diversification beyond gold. While central banks globally were buying record amounts of gold, over 1,000 tons annually for 3 consecutive years, gold prices were also surging. Silver, meanwhile, was massively undervalued relative to gold. The gold-silver ratio, how many ounces of silver equal 1 ounce of gold, hit 85.1. Historically, this ratio averages 1560.1. At 85:1, silver was either severely underpriced or gold was in a bubble. Either way, silver represented better value. Third, industrial strategy. Russia holds 92,000 metric tons of silver reserves, the second largest in the world after Peru. They produced 1,100 metric tons in 2024. New mines like Prognos are coming online with projected output of 5 to 7 million ounces annually. By buying silver strategically when prices were suppressed, Russia could support domestic mining, secure industrial supply for technology sectors, and build reserves at what they viewed as bargain prices. Fourth, the BRICS currency foundation. And this is where it gets really interesting. In late 2024, reports emerged about a proposed BRICS currency unit called the Unit, backed 40% by physical gold and 60% by BRICS national currencies. By December 2025, a pilot was actually launched on blockchain infrastructure. Silver's inclusion in Russian reserves isn't just about silver itself, it's about establishing the principle that precious metals, plural, can back currency systems. Gold provides the primary anchor. Silver provides supplementary backing, particularly for smaller denominations and industrial applications. Russia's move signaled to other BRICS nations physical commodities, not just gold, can form the basis of post-dollar financial architecture. And crucially, countries with large silver reserves, like China, now had a roadmap. Market reaction was immediate. Silver prices, which had been relatively stagnant, surged over 30% from early 2025 onward. By September 2025, silver hit $42 per ounce, outperforming gold percentage-wise. But Russia's announcement had another effect. It validated years of quiet accumulation by their largest ally, an ally that produces 80% of the world's solar panels, an ally that's the world's largest silver consumer, an ally that's been playing a much longer, much more sophisticated game, China. If Russia's silver strategy was the public declaration of war, China's has been the covert operation that's been running for over a decade, and the evidence is both circumstantial and compelling. Let's start with what we know for certain. China currently holds 70,000 metric tons of silver reserves, third globally. They produced 3,300 metric tons in 2024. But here's the critical detail. China is the world's largest silver consumer by an enormous margin. Why? Because China manufactures over 80% of global solar panels. Each panel contains about 111 milligrams of silver. In 2024, the photovoltaic sector alone consumed over 200 million ounces globally, and China dominated that production. China is also the world's largest producer of electronics, the fastest growing EV market, and a massive consumer of industrial silver across countless applications. Their legitimate industrial demand for silver is staggering. But there is a theory, unproven but with compelling supporting evidence, that China has been strategically accumulating silver far beyond their reported reserves. Here's the circumstantial case. The gold precedent. China's documented gold reserves grew from about 600 tons in 2008 to 2,280 tons by end of 2024. Why would China underreport gold? Because announcing massive purchases would drive prices higher, making future accumulation more expensive. Better to buy quietly than reveal holdings later when you're done accumulating. If China applied the same strategy to silver, buying quietly through front companies, through London markets, through exchanges without attribution, they could have accumulated tens of thousands of additional tons without public disclosure. The JP Morgan connection. In 2020, JP Morgan paid $920 million to settle charges for manipulating precious metals markets, specifically gold and silver, from 2008 to 2016. They were accused of spoofing, placing fake orders to manipulate prices downward. Now, here's the interesting part. During that exact period, someone was buying massive amounts of physical silver at suppressed prices. China's imports surged. Their refining capacity expanded dramatically. Some analysts theorize that JP Morgan's manipulation, whether coordinated or not, created ideal conditions for a sophisticated state actor to accumulate silver at artificially low prices. China's industrial economy provided perfect cover. We're just buying for manufacturing needs. The deficit paradox. From 2010 to 2022, global silver markets showed persistent deficits, more consumption than production. Yet prices remained relatively stable, or even declined during parts of this period. Economic theory says shortages should drive prices up. So where was the silver going? Industrial demand explained some of it, but market analysts noticed something odd. Physical silver was disappearing into China at rates that exceeded documented industrial usage. The theory? China was building strategic reserves through state-owned enterprises, private companies acting on government guidance, and financial institutions accumulating physical metal, all masked as industrial demand. The 2022 shift. Around 2022, something changed. China's silver market dynamics flipped. They went from being a net exporter or balanced market to becoming a significant importer. Their industrial demand surged 44% in a single year. If the accumulation theory is correct, this timing is revealing. By 2022, China may have decided they'd accumulated sufficient strategic reserves. Now they're consuming at full industrial rates without restraint because their reserve position is secure. Current reality. Whether or not historical accumulation occurred, China's current position is undeniable. In the first half of 2025, Russia's precious metal exports to China nearly doubled year over year, reaching $1 billion. This included significant quantities of silver. China and Russia are coordinating precious metal strategies as part of their broader de-dollarization alliance. China now imports record amounts of silver openly. Their solar manufacturing alone will require 100 plus million ounces annually by 2027. Their EV sector is expanding exponentially. Their technology manufacturing dominates globally. Here's why this matters. China doesn't just hold silver. They control silver supply chains. They dominate silver-consuming industries. They can influence global silver demand almost unilaterally through industrial policy. If China decided tomorrow to stockpile another year's worth of silver for strategic industrial reserves, they could buy 200, 300 million ounces. That's more than the entire global annual deficit. Prices would explode overnight. And here's the geopolitical calculation. Every dollar they spend on silver is one less dollar in U.S. treasuries. Every ounce they hold is wealth that can't be sanctioned. Every solar panel they manufacture locks in silver demand that makes the metal increasingly scarce. Silver isn't just an industrial commodity for China. It's a strategic resource in a multi-decade competition with the United States. And they're positioned better than any other nation to control its future. Now let's connect all the pieces. Because what Russia and China are building isn't just about silver, it's about replacing the dollar itself. On December 8th, 2025, the BRICS Alliance officially launched a pilot currency called the Unit. This isn't speculation anymore, it's operational. The Unit is a blockchain-based digital trade currency backed by 40% physical gold and 60% BRICS national currencies, Brazilian real, Chinese yuan, Indian rupee, Russian ruble, and South African rand, equally weighted. The pilot issued 100 units on October 31st, 2025, each initially pegged to 1 gram of gold. The value adjusts daily based on gold prices and currency movements. By early December, each unit was worth approximately 0.98 grams of gold. Let me be crystal clear about what this represents. This is the first working prototype of a commodity-backed, multinational digital currency designed explicitly to bypass the US dollar in international trade. Think about the structure for a moment. The 40% gold backing provides stability and intrinsic value. The 60% currency basket provides flexibility and prevents any single nation from dominating. The blockchain infrastructure enables instant settlement without SWIFT, without correspondent banks, without Western financial infrastructure. And here's where silver enters the equation. While the unit's current formula specifies gold, Russia's explicit addition of silver to state reserves establishes the precedent for expanding the commodity basket. Future iterations could include silver, platinum, rare earths, essentially any strategic commodity. Why would they do this? Scalability. Gold's price, approaching $4,000 per ounce, makes it impractical for smaller transactions. Silver, at $40.60 per ounce, provides a middle tier. Think of it like the relationship between 100 bills and $20 bills. Industrial backing. The unit is not just for trade settlement, it is potentially a foundation for a broader monetary system. Backing currency partially with industrially critical metals like silver creates real-world economic linkage. Every solar panel, every EV, every electronics device creates fundamental demand for the backing commodity. Supply control. BRICS nations collectively control massive silver reserves and production. The unit pilot is currently limited to participating BRICS governments and authorized financial institutions, but the roadmap is aggressive. 2025. Q4. Expanded pilot testing. 2026. H1. Limited commercial deployment for select trade categories. 2027, gradual expansion to broader commercial usage. 11 countries are full participants. 22 additional countries have applied to join. This includes several African nations, Middle Eastern states, and Southeast Asian economies, many of which have been on the receiving end of U.S. sanctions or dollar weaponization. The infrastructure is being built on multiple levels. mBridge platform, a cross-border payment system connecting central bank digital currencies, reached minimum viable product stage in 2024. Compatible with Ethereum virtual machine for smart contract functionality. BRICS Pay, a payment system competitor to SWIFT, enabling transactions in local currencies without dollar intermediation. Shanghai Futures Exchange, launched in March 2024 with T+0 instant settlement for precious metals trading, offers direct gold and silver trading without Western exchanges. Physical gold hubs, Singapore and Shanghai trading centers bypass London and New York price-setting mechanisms. Now, the Western financial establishment is dismissing the unit as unworkable. They point to coordination challenges, technical hurdles, liquidity concerns, China's unclear participation. But that's exactly what they said about China's Belt and Road Initiative, the Asian Infrastructure Investment Bank. Russia, China. Pipeline agreements, UN-denominated oil contracts, all of which are now operational and reshaping global commerce. Here's what the skeptics miss. The unit doesn't need to replace the dollar overnight. It just needs to provide an alternative for countries that want one. Venezuela doesn't want to risk dollar sanctions? Use the unit. Iran wants to sell oil without SWIFT access? Use the unit. African nations tired of dollar volatility? Use the unit. Even 10-15% of global trade shifting to commodity-backed alternative systems would fundamentally alter the balance of financial power. And once the system proves functional, network effects take over. More countries join. More trade settles outside the dollar. Dollar demand decreases. U.S. Treasury bond demand weakens. Dollar's reserve currency status erodes. And every step of this process increases demand for the backing commodities, especially silver. So we've established the geopolitical game, but there's another dimension that makes silver uniquely powerful as a weapon. The fundamentals are on a knife's edge. Remember from earlier, the silver market has experienced deficits for 5 consecutive years. In 2024 alone, the deficit reached 215 million ounces. Supply can't keep up with demand. Industrial consumption hit 680 million ounces in 2024, with forecasts exceeding 700 million for 2025. Solar alone consumes 200 plus million ounces annually and growing. EVs are adding 80 to 90 million ounces. Electronics remain steady at high levels. Meanwhile, mine production increased only 0.9% to 820 million ounces in 2024. And 70% of that comes as byproduct from copper, lead, zinc, and gold mining. When those metals face low prices, silver production drops regardless of silver prices. There are no mega discoveries coming online, no technological breakthroughs making extraction dramatically cheaper. The 7-10 year lag between discovery and production means even if new deposits were found tomorrow, they wouldn't help until 2032, 2035. Now, layer in the geopolitical dimension. Scenario 1. Defensive stockpiling. If major nations decide silver is a strategic resource, which Russia's actions suggest, they might begin stockpiling for industrial security, not just reserve purposes. China already dominates solar manufacturing. What if they decided to stockpile 2 to 3 years of silver inventory for supply chain security? That's 400-600 million ounces of sudden demand. There isn't enough available silver on Earth to fulfill that order without prices spiking 3 to 5x. Scenario 2. BRICS currency expansion. If the unit succeeds and expands to include silver in its backing formula, participating nations would need to acquire silver for reserves. Even a modest allocation, say 10% silver backing alongside gold, would require tens of millions of ounces. Unlike gold, where central banks already hold 36,000 plus tons, official silver reserves are minimal. They'd be entering the market as massive new buyers in an already tight market. Scenario 3. Trade war weaponization. Trump's tariff threats against BRICS nations reached 100% for any country that abandons the dollar. While not implemented as of December 2025, such extreme protectionism could accelerate de-dollarization efforts. Sanctions, tariffs, and trade restrictions tend to increase commodity hoarding. Countries stockpile resources they might be cut off from. Silver, being industrially critical, becomes a prime candidate. Scenario 4. The squeeze. This is the nightmare scenario for Western financial interests. What if China, Russia, and aligned nations coordinated to squeeze the silver market? Not through price manipulation, through actual physical purchases. China announces they're buying 500 million ounces for strategic reserves. Russia adds another 200 million. India, Saudi Arabia, Iran join in. Suddenly, 1 billion ounces of demand hits markets that can't supply it. COMEX futures markets, which trade far more silver on paper than exists physically, would face delivery demands they can't meet. Default risk, contract settlement in cash rather than metal, complete loss of price discovery mechanism. Physical silver prices would detach from paper prices, premiums would explode, industries dependent on silver, solar, EV, electronics would face supply crises. And here's the geopolitical weapon aspect. The United States and Europe are far more dependent on complex silver-intensive technologies than developing nations. A silver shortage would hit Western advanced manufacturing harder than emerging economies. Solar panel production would struggle in Europe and the US, while China controls supply. EV manufacturing would face material constraints. Electronics production would slow. Meanwhile, BRICS nations that control production and hold reserves would have leverage. Want silver? Buy it with yuan, or settle trade in the unit, or recognize our sphere of influence in your region. Silver becomes not just a store of value, but a tool of geopolitical coercion. Control the metal, control the technology, control the technology, control the future economy. And the beautiful part of this strategy, from China and Russia's perspective, it's entirely legal. They're just buying a commodity, diversifying reserves, securing industrial supply chains. Nothing the US can sanction them for without looking hypocritical. So what does all this mean? Let's think through the cascading implications. For the dollar. The dollar won't collapse tomorrow. It won't even collapse next year. But its dominance is eroding, and silver's strategy accelerates that erosion. The dollar's share of global reserves has fallen from over 70% in the 1990s to about 58% by late 2024. Each percentage point represents roughly $130 billion in shifting to other assets. As BRICS nations reduce dollar holdings, U.S. Treasury demand weakens. Interest rates rise to attract buyers. Government borrowing costs increase. Fiscal pressures mount. The Federal Reserve's ability to export inflation through dollar dominance diminishes. Americans would feel this as purchasing power decline and reduced living standards. For silver prices, if even a fraction of this geopolitical dynamic plays out, silver prices could see explosive growth. Conservative forecasts already put silver at $70, $80 by late 2026. Mid-range predictions suggest $100 by 2027, 2028. Aggressive forecasts reach $150, $200 by 2030. But if strategic reserve accumulation begins in earnest, if the unit expands to include silver backing, if supply squeezes materialize, some analysts suggest $300 to $500 per ounce becomes possible. Not likely, but possible. The gold-silver ratio could compress from current 85.1 to historical 40.1 or even 15.1. At 40.1, with gold at $4,000, silver would be $100. At 15.1, silver would be $267. These are not fantasy numbers. They're historical norms that existed for thousands of years. For technology and industry, higher silver prices create immediate challenges for solar, EV, and electronics manufacturers. Either they pass costs to consumers, inflation in green technology, absorb costs, margin compression, reduced profitability, aggressively pursue substitution, technological risk, performance trade-offs, secure long-term supply contracts, upfront capital requirements. The irony is profound. The green energy transition designed to address climate change could be bottlenecked by shortage of the key material enabling that transition. And the nations controlling that material are geopolitical adversaries of the West. For geopolitical power, silver strategy is one piece of a broader game, but it's a revealing piece. China and Russia have studied American power and identified its source, control of the global financial system through dollar dominance. They've witnessed how that power was weaponized against Iran, Afghanistan, Venezuela, North Korea, and ultimately Russia itself. Their response isn't to build a better military, though they're doing that too. Their response is to build a parallel financial system, one based on commodities, national currencies, and blockchain infrastructure, rather than dollar hegemony. Silver fits this strategy perfectly because it's physically strategic, industrial necessity. It's financially valuable, precious metal, store of value. It's supply constrained, can't be printed or synthesized. It exists outside Western control, production distributed globally. It's undervalued. Decades of price suppression create opportunity. By accumulating silver, backing currencies with it, and controlling supply chains around it, BRICS nations create leverage that can't be sanctioned away. What should you do? I'm not a financial advisor, and this isn't investment advice, but I can share the strategic logic that central banks are clearly following. Physical assets matter in uncertain times, especially assets that can't be frozen, seized, printed, or inflated away, especially assets that have industrial necessity beyond financial speculation. Diversification away from pure fiat currency exposure becomes more logical. as dollar weaponization demonstrates that reserves aren't truly yours if held in another nation's banking system. Understanding supply-demand fundamentals matters. Silver's industrial deficit is structural, not cyclical. Demand drivers, solar, EVs, electronics, are locked in through government mandates and technological trends. Supply is constrained by geology and production mechanics. And finally, paying attention to what major state actors do with their money often provides better insight than what they say publicly. Russia didn't announce silver purchases for fun. China didn't build the world's largest solar industry by accident. BRICS didn't launch a gold-backed currency pilot as a publicity stunt. These are calculated moves in a decades-long strategy to reshape global financial architecture. And silver sits at the heart of that strategy. Final thought, the silent financial war isn't coming. It's already here. It's being fought not with bombs and bullets, but with central bank purchases, currency mechanisms, and control over strategic commodities. Most people won't notice until the dollar loses its reserve status, until silver shortages hit manufacturing, until the unit is settling trillions in trade outside Western systems. By then, the war will already be won. Not by the side with the most aircraft carriers, but by the side that controlled the resources the modern world can't function without. Silver is the new weapon. And the nations that understand that fact are positioning for a post-dollar world. The question isn't whether this is happening. The question is what you do with that knowledge.